A lot of business owners are good at what they do, but when it comes to budgeting, cash flow, profit, taxes, and planning ahead, things can get overwhelming pretty quickly. If you run a business and you always feel like your finances are ahead of you, then this video is for you. Welcome back to the channel. I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audit, and taxes, and I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the YouTube channel and turn on all notifications. And check out the blog site where we post every Monday, Wednesday, and Friday. So, in today's video, I'm breaking down business financial planning basics in a simple way so you can better understand your numbers, make smarter decisions, and build a stronger business. If you're a small business owner, entrepreneur, freelancer, or side hustler trying to get more financially organized, stay with me because this is going to help. So, let's get into it. Let's start with the basics. Business financial planning is simply the process of understanding your business finances and creating a strategy of how your money will be managed. That includes things like how much money is coming in, how much money is going out, whether your business is actually profitable, how to prep for taxes, how to plan for growth, and how to avoid cash flow problems. A lot of business owners think financial planning is something only large companies do, and that's simply not true. If you own a business, financial planning is one of the most important things you can do because without it, you're basically making business decisions in the dark. Your bank account is not your business's health. This is one of the biggest mistakes that I see. A business owner looks at their checking account and think, I've got money in there, so I'm good. But your bank balances do not tell the full story. And here's why. Because that money may already be spoken for. You may have payroll due next week, rent due on the 1st, credit card bills coming, quarterly taxes approaching, vendor payments outstanding, or slow receivables from clients who haven't paid yet. So, yes, you may have cash sitting there today, but that does not automatically mean your business is financially healthy. A real financial plan helps you to understand what that money actually needs to cover. That's a huge difference. If there's one thing every business owner needs to understand, and that is cash flow. Cash flow is the movement of money in and out of your business. And honestly, a lot of businesses don't fail because they aren't making money. They fail because they run out of cash. That is especially common when customers pay late, sales are inconsistent, expenses are rising, or there's no plan for slower months. So, what should you do? You need a cash flow forecast. That means projecting expected income, fixed monthly expenses, variable business costs, tax payments, large one time purchases, and any seasonal fluctuations. When you know what's coming, you can plan for it. And when you don't know what's coming, everything feels like an emergency. That's where stress starts. I know some business owners that hear the word budget and they immediately tune out. But a budget is not about a restriction, a budget is about direction. It tells your money where to go before it all disappears. Your business budget should include rent or office expense, payroll or contractor costs, software subscriptions, insurance, marketing, inventory or supplies, loan payments, owner pay, and tax savings. One of the best things a budget does is help you spot the waste. Maybe you're paying for tools you don't use. Maybe you're spending too high for the return you're getting. Maybe you're underpricing your services and your numbers are exposing it. A budget gives you visibility, and visibility creates control. This one is a huge one. A lot of people get excited about revenue. And yes, revenue matters, but profits matter more. Because revenue tells you how much came in, profit tells you how much you actually keep. And those are not the same thing. You could have $200,000 business and still be struggling if your expenses are eating up everything you make. That's why you need to review your profit and loss statement regularly and ask yourself these couple questions. Which service or products are the most profitable? Which one takes the most time to bring the least return? Where are margins too thin? Are there costs that can be reduced without hurting quality? Sometimes the sometimes the answer is not sell more. Sometimes the answer is raise your prices, improve efficiency, cut unnecessary overhead, or stop offering something that's not worth it. That's the real financial planning. A lot of business owners make this mistake when it comes to taxes. They think about taxes only when it's time to file. That is way too late. Tax planning should be part of your financial plan all year long. Because if you wait until tax season, you're reach you're reacting instead of planning. Here are a few simple tax planning basics. Set aside money consistently for taxes. Track business expenses properly. Keep personal and business spending separate. Review your entity structure when appropriate. Work with the CPA before year end, not just after. This is especially important if your income is increasing, because more revenue without planning can create a nasty tax surprise, and nobody likes opening that bill. Let's talk about business reserves. Because unexpected expenses are not rare in business, they're guaranteed. Stuff happens. Equipments break, clients leave, sales slow down, repairs pop up, costs increase, and people pay late. And if your business has no cushion, every setback becomes a crisis. That's why I strongly recommend building a reserve fund. A good starting goal is 1 to 3 months of essential operating expenses. That's including things you absolutely need to keep the business running. That reserve gives you a breathing room, and breathing room gives you options. Growth should be planned, not just hoped for. A lot of business owners want to hire help, expand services, invest in marketing, buy equipment, and open up a second location, or scale operations. And all that can be great, but growth without planning can become expensive very quickly. Before making a big business move, ask, can my business truly afford this? What is the expected return? How long until this investment pays off? Will this improve efficiency, profitability, or customer experience? Because not every growth opportunity is a good financial move. A smart business doesn't just chase growth, it grows with strategy. One of the best habits you can build as a business owner is monthly financial check ins. Nothing fancy, just consistency. Once a month, review revenue, expenses, cash flow, profit, any outstanding invoices, tax savings, upcoming bills, and progress towards goals. This simple habit can save you from many avoidable problems because when you review your numbers regularly, you catch things early. And earlier is always better in business. So, if you take nothing else from this video, take this. Business financial planning isn't about being perfect, it's about being consistent. No, you don't need to know everything overnight, but you do need a system. If you found this video helpful, hit the like button and be sure to subscribe for more videos. And if you need help setting up your business financial systems, drop a comment below. And I'll see you guys next week when we talk about using KPIs in your business accounting.